there. Welcome back to Reach Now. You're watching Buy Now, Sell Now. This is a show where we are answering all your stock-specific queries, and we still have Rajesh with us to answer all your fundamental queries. And on the technicals, we are now joined by Ajit Mishra, the SVP Research at Religare Broking. Hi, Ajit. Good morning to you as well. So let's get back to all the queries then. Now, this one is coming from K. Parsasati, who's a senior citizen from Chennai. His query is on Tata Capital. He says that he was allotted 86 shares of Tata Capital at a price of 326, and now it has started to show some momentum, trading just about at 344 currently. He wants to know whether he should hold or sell at the current levels and book the minimum profit that he has right now. What should be the target price that he should look at for a 3 to 6 month perspective? Ajit, what would you suggest? What are the targets that he should be looking at? Tata Capital.
Yeah, good morning, Kanishka. So, see, it's a recent listing. We don't have much data, but based on the available information, since the stock has finally witnessed a decisive move in today's session, means the stock has reclaimed the record highs. The range suggests that maybe closer to around 375, 390 zone is something that the stock might attempt. But since we have limited data, one should keep on reevaluating. The moment we reach to those levels, one can trail stop losses on every rise. So as of now, 335, 330 is the zone basically where we have immediate support. So that should be a stop loss, and he can continue to hold his positions.
Continue to hold Tata Capital. That's the take coming in from Ajit. But then Rajesh, is a long-term question with their wires Gravitas India and as well as IDFC First Bank. But let's move on and get you another query answer. This is coming from G. Krishnamurthy, who's writing from Chennai. He says that he bought 400 shares of Metro Brands at a price of 495. What should he do now? Should he continue to hold for a longer duration? And so that's the first question that he has. Ajit, let me come to you for this one. And then he's asking, which is the best stock to buy in the year 2026 for a long-term perspective, which could give good returns? So, Rajesh, I'll come to you for that. But Ajit, first of all, Metro Brands 495 is his holding price. What would you suggest? What should he do?
So 495 means he has already seen decent returns on the stock. It's been almost 2 years that he has been holding this without any return. Means the stock has been consolidating in 1050, 1350 band. But comparatively within this space, it's outperforming, no doubt about it. Because considering what we are seeing in Bata India and other footwear-related counters, it's comparatively better placed. So we feel that one should continue with this position, and 1050 on the closing, this should be a trading stop. The moment we cross 1350 levels decisively next time, probably we are set for the next leg of the up move, which could help the stock to inch towards 1650 or maybe higher.
Tech view on Metro Brands and Mr. Krishnamurthy to go along if at all one is looking for an investment. But then Mr. Ramesh from Hyderabad wants to take on Coforge and BEL. He wants to enter these particular counters. Let's take a short-term and a long-term view. Ajit, I'll come to you first. So Coforge and BEL, any specific levels where he can enter or any other recommendation in the same space if he's looking for one?
So, Kavita, Coforge has done exceptionally well within the mid-cap IT names, no doubt about it. It means the stock has recently made a new record highs. Today, we are seeing a bit of a pressure. It's down by roughly 5.5% after this recent strong move. So this may result in further consolidation or maybe dip towards 1700, 1650 area. So around that area, he can consider going long. At current level, in case if he is considering something in the IT basket, persistent looks comparatively better. Means the stock has formed a fresh buying pivot around its record highs. 6200 is the immediate base. So the moment we cross the 6600 mark, we are set for 7000 plus levels. So persistent is something that he can consider instead of Coforge at current levels.
All right, Rajesh, your take, Coforge and BEL? Back to the queries then, and Ajit, this one is for you. M. Mathivanan has written to us from Chennai. They have 115 shares of Quest Corp. Their buying price is 350 rupees, and 90 shares of Happiest Minds as well. Their buying price is 771. So what would you suggest? What should they do? Should they continue to hold on to both of these counters, and what are the targets that one should look at, say, from a 3 to 6 month perspective?
So, Kanishka, Quest Corp, Happiest Minds, both are underperforming in the respective sectors. And what we are seeing that of late, Quest Corp is making an attempt of a rebound, but it's not very decisive. It means the volume is missing. So it's very difficult to rely on such kind of reversal attempts. So in my opinion, if the view is short term, there's no point holding to the losers. Means you can exit both the counters and switch to the sectors which are trading largely in sync with the benchmark trend. So maybe private banks, auto, metals, select stock from the pharma and even the defense basket is something that one can consider instead of holding to these underperforming counters.
Okay, that's the take coming in from Ajit. But then let's move on. A very interesting question coming in, and I'll be coming to both of you for this. This is Mr. KVS Mani from Bangalore. He wants to invest 5 lakhs for 3 years, and he wants a suggestion on 5 best shares that could give him 40% by the end of 3 years. So, all right, Ajit, I'll come to you first. 5 names, what would that be?
So, Kavita, in fact, yesterday we released our New Year picks, and these are the names which would resonate with, even if you are a first-time investor, because we have largely kept the large cap names and select mid-cap names too. And even for the 3-year time horizon, obviously, things changes with every passing quarter nowadays, but still we believe that these stocks have potential to do well. So, Mahindra & Mahindra, Kotak Bank, Lupin, ICICI Pru, and JK Lakshmi Cement. These are the 5 names which you can consider investing for this year for the overall list of stocks. Average return potential is roughly around 20%. So 40% is quite achievable provided everything goes well in next 3 years.
Perfect. Those are the 5 names from Ajit. Rajesh, what do you have to suggest?
Take on the auto space, you could look at maybe Hyundai or Bajaj also. But moving on to the next query, this is from Nitin, who's written to us from Tamil Nadu. Ajit, he wants to know whether he can buy Hexaware, Shakti Pumps and Nalco at the current levels. What would you suggest?
So National Aluminium means metal counters. We all know the kind of euphoric move that most of these counters are experiencing. National Aluminium, it's also inching towards its record high with every passing day. Fresh buying, I would recommend to wait because the stock have moved up almost vertically in the last 4-5 trading sessions. So there should be some bit of a consolidation around the current area and maybe a dip towards 285, around that zone where one can consider going long, with 274 as a stop loss and 310 as a position target. Shakti Pump, the stock has rebounded off late sharply with volumes, but still we are not out of woods yet. Means the 800-820 zone is where we have multiple resistances on the long-term basis. So let it surpass this zone decisively, then only you can consider going long. Hexaware, I feel that the prudent approach is to avoid citing its underperformance, and the preference should be given to Persistent or maybe Tech Mahindra.
All right, let's move on and let's take a long-term question. Rajesh, this is on CG Power.
Let's get to another question then. Now this one is coming from Vijay Kirti, writing to us from Chennai. They have 100 shares of Root Mobile, bought at a price of 740, and currently they are trading lower. So what's the what is it that they should be doing? Should they book their loss, hold, or average at the current prices? Ajit, what do you suggest? Root Mobile, 740 is the holding price.
So, Kanisha, the stock is still hovering around 52-week low. Of late, there were attempts of recovery, rebound with significant rise in the volumes. But again, we are seeing that the stock is gradually drifting lower. The volumes are absent, which is a good sign. So from the trading point of view, since he has bought it at very close to the current levels, he can continue to hold his position, but 695 should be a strict stop loss, considering it's the stock's overall underperformance. On the higher side, a level close to around 770, 775 is the area where we have multiple resistance to watch out for. So around that area, he can consider booking profits.
All right, one more short-term query. Ajit, I'll come to you. This is Mr. Khanna from Hyderabad and Central Bank. He's holding 1,000 quantity at 43, and short-term, what's going to be the outlook and a target price if you could want to give him?
So, Kavita, it's underperforming within this space. Means if you see that most of the names in the PSU basket, especially the quality names like SBI, Bank of Baroda, Canara Bank, Indian Bank, they have done exceptionally well in the last few months. Canara Bank Central Bank on the other hand is still struggling around 52-week low. So that clearly shows the kind of underperformance the stock is experiencing, alongside with the counters like IOB, UCO Bank, and some of the other names in the PSU pack. So the prudent approach is to take the losses and switch to SBI, even if you wish to stay with the PSU name.
Look at switching to SBI instead of central bank. That's the word coming in. But that was the last query of the day. Thank you, Ajit and Rajesh, for joining us today and helping us answer all of the queries from a fundamental as well as technical perspective. Well, with that, we're completely timed out on this edition of Buy Now, Sell Now, Kavita, and I will take your leave, but don't go anywhere. Markets at Noon is coming up next.